Hey there, Kenneth French with VastSolutionsGroup.com. We're going to be talking about real estate, asset protection, and bookkeeping. First, I'm going to tell you a quick story as to why we're putting this together. One of our clients just recently, actually a new client, just found out that he was getting sued for a lot of money simply because he didn't have his books in order or his bookkeeping in order. Once again, Kenneth French, VastSolutionsGroup.com. Now, you probably don't want to be in those same shoes, work 60, 50 years, whatever the case is, and lose all your money just due to something as small or as big, seemingly, as bookkeeping. We're hanging out with Bob Bloom. Bob, why don't you tell us a little bit about who you are and why you're the expert attorney asset protection that is the man. Go.
Hi, Kenneth. My name is Bob Bloom. As you know, I think we got some echo. Is that right? Can you hear it?
Oh, I don't hear it, but
okay. I'll turn this off and just go with. I'll just go with computer sound. Okay, well, I'm an attorney and I'm the head of asset defense team, and we specialize in setting up people to protect them from their assets, protect their assets. But really, we don't just provide LLCs; we provide attention, and we provide customized service to wade through all of the information out there. So, and how it applies to a particular individual. So that's kind of what we do.
And we have one other individual, Nick Legamaro, who's going to be joining us in just a moment. He might be undertaking some technical difficulties, but just really quickly, a little bit about myself. I run VastSolutionsGroup.com. We do tax, finance, and artificial intelligence. You might be thinking, artificial intelligence, doesn't everyone do that nowadays? Well, we've been doing it for years. We started in 2010. Really, 2018 is when we had our own model, that being called Einstein. We used artificial intelligence to lower tax liability, to get business owners really get their books in order, hopefully to lower tax liability to the extent possible. And we're going to be talking about how ways that really bookkeeping, something so small, can mean so much, especially when we're talking about, the thought of that story earlier where one of our new clients potentially is getting sued, and we're going to be helping him clean it up, when if he could have just spent a couple of bucks up front with bookkeeping, he would have been able to save a ton of headache, a ton of money, et cetera, et cetera. Bob, why don't we get to you? You're a big-time asset protection attorney. You know exactly what it takes to make sure that your clients are taken care of as far as asset protection, putting a moat around their assets. Why is asset protection so important for real estate investors, of which a lot of the people who are watching and listening to this are real estate investors?
Well, real estate is inherently a high-risk asset compared to owning a stock or owning some other type of asset. A physical asset like real estate cannot be hidden. It is out there. There's an address, there's a public record, there's a deed, and people are injured on rental properties. You don't control, as the owner, what happens on your property because you don't know who your tenants are inviting over, what kind of activities are going to take place, and there are so many stories about injuries occur on properties. And if the property is owned in your personal name, you have unlimited personal liability, which means that you are fully liable for the entire amount of the judgment. So that means that any asset can be taken, personal assets, business assets, and that's why we want to set up as some kind of an entity, typically an LLC, because that protects you from business risk and protects personal assets.
Explain a little bit about piercing the corporate veil. That is the big thing with respect to asset protection. But explain that in layman's terms so we all understand that.
Well, we set up an LLC, let's say, to protect ourselves from personal liability. So in the worst case scenario, if there is a lawsuit, they may be able to take the business assets, but at least they couldn't take your personal assets. On the flip side, if you are liable, there's a judgment against you personally because maybe you caused a car accident or some other thing. Now they could take personal assets, but if you have business assets isolated and protected in LLC, they can't take your business assets. So piercing the corporate veil basically means that separation between you and the business disappears because the court does not regard your LLC as a real business. And therefore, the court says this isn't a real LLC. You didn't take it seriously. The court isn't going to take it seriously. So we're going to act as if there is no LLC, which means you are fully liable on a personal level, business assets, fully exposed, unlimited personal liability if they pierce the corporate veil. And that is not a rare occurrence. It happens in well over 50% of the cases. So many LLCs simply fail to protect.
So by the way, I mean, I'm going to give you a little bit of time to brag about yourself. So why you? Why are you the expert in asset allocation, asset protection and making sure real estate investors don't get sued, by the way?
Well, first of all, I never brag about myself, Kenner. So,
No, you don't. I know.
I hate bragging about myself, so I don't do it. But I'll tell you a little bit about my background, and that is I started out as a trial lawyer for many years. I defended companies, sued people, sued companies, and a particular case really rubbed me the wrong way. It was a case where my client really had done something wrong, and the individuals suing were people. They were people, not just a company. And the problem was that, really my client could have paid a bunch of money, restored their jobs, restored their pensions, restored all kinds of back pay. But because at trial, the plaintiff's lawyer made a serious mistake, and I capitalized on that mistake, we ended up winning the case. Now, we shouldn't have won. And, I went into law because of, truth, justice, the American way. Justice will win out. But this is where justice didn't win out. It wasn't just the result. And those individuals were hurt very badly financially. And as a result, I just said, I'm not going to do this anymore. I'm just not going to do litigation anymore. And took everything I learned about the courtroom, lawsuits, suing, and turned it 180 degrees around to protect clients and lawyers like I used to be. So that is just a bit of quick background. So I've got a very strong litigation background and know all the tricks of the courtroom and know exactly how the courts are going to come after people.
Yep. Well, thanks for doing something you don't like to do, and that's bragging about yourself. By the way, if anyone has any questions, please go ahead and put them in the chat. We'll make sure that your questions are answered. We're going to be going for about 45 minutes, by the way. And also, if you have any questions, you can go ahead and email those, and you don't feel like putting them in the chat, you can email those to me personally at Kenner, Kenner, at vastsolutionsgroup.com. Again, Kenner at vastsolutionsgroup.com, or go ahead and put them in the chat. By the way, again, some people are putting some messages in the chat, and Bob, they're mentioning that your audio needs to be cleaned up a little bit. So if you can, while you're doing that,
Can you hear me okay at this point, Kenner? Can you hear me all right?
I can, but a couple of people have said there's issues with your.
There was some feedback, so I just hopefully fixed it. Let's hope. So thank you for the note in the chat, and if you can hear me better now, let me know if that's the case.
It does sound better. Yes,
said it's better.
People said it's better now.
Thank you very much.
So what I should also note as we get going really quickly, I sent out a note to some of our clients in our community here at vastsolutionsgroup.com asking for questions that would help us put together an agenda. And maybe this is for you and for me. Our audits going up, meaning our IRS audits going up for real estate investors. And I'll throw that question to you. What are your thoughts on that? Do you think that's the case going forward, that audits with respect to IRS and real estate investors are going up?
Yes and no. And where it's yes, that is when clients set up their own LLC and they end up reporting their income and expenses on Schedule C or Schedule E. And those are very heavily audited schedules on their personal tax return. Instead, it's better if you actually have a partnership return, a Form 1065. Those are audited at the very lowest rates. S corporations are audited at high rates, and certainly Schedule C and Schedule E is audited at very high rates, much higher rates than others. So if you know what you're doing, which frankly, unfortunately, most people don't, they end up putting a target on their backs for the IRS, asking the IRS more or less to audit them.
Yeah, I'm going to dovetail that. What we found here at, again, vastsolutionsgroup.com, that, there is talk about, hiring a large number of IRS agents, number one. Number two, putting money into technology to make it easier for the government to do audits. So what I would say is, in general, based on that comment, there looks like there is going to be more audit work going forward. Who knows if that's going to be true? But what I would say is one small solution, that's partly why we're here talking, is getting your books in order. If you get your books in order, there's so many positive elements for a real estate investor that it blows my mind. Number one, it doesn't take that much time to get your books in order. Plus, you want to know what your rate of return is. Why not get your books in order so you know what your rate of return is on a certain department, on a certain product, or whatever the case is? Number one. Number two, you can do it for cheap nowadays, and we're going to talk about that in just a little bit. But what I would also say, to make a comment on that, um, um, as far as asset protection goes, if your books are in order, you know that you're taken care of. You've siloed your assets. You're not combining assets, which opens you up to a lawsuit. And really, as real estate investors, I think you basically mentioned it, Bob. People think we're rich because we're real estate investors. Hopefully, we are rich, by the way. And so people, have you in their targets because you're a real estate investor. They want to go after where the money is, where the pot of gold is. And if you're a real estate investor, you have some money. Those are the people that potentially have a target on their back, and those are the people who would be apt for a lawsuit. But if you have your ducks in a row, that being your books in order, your bookkeeping in order, it would be that much more difficult to be the loser in a lawsuit because you've taken care of your assets and you've got your books in proper order. So in line with that, Bob, I'm going to ask another question with respect to
before you go there, Kenner. Could I make a couple of comments on what you just said?
Please do.
First of all, if you don't know your numbers because you don't have books, you don't know your business. And you've got to be able to know what your numbers are in order to properly manage your business, period. So that's not a legal thing. That's nothing more than just good management, good business practice. But from a legal standpoint, real businesses have books. And courts are going to look at your LLC or corporation or limited partnership and ask themselves this basic question: does this look like a real business? And you'd be surprised how many LLCs or corporations or limited partnerships don't even have a bank account. They don't have books. They don't have all the things that a normal corporation or business would really have. And if those things are lacking, if the books are lacking, many courts have pierced the corporate veil on that basis. Because it doesn't look like a real business. The way you ought to think about this is this: the court is going to say or ask this question: did you take your business seriously? Did you treat this business as a separate entity or as your own personal piggy bank? And we have to treat these entities as if they are real people, not live persons, but actual people, persons, I should say, that have their own legal rights. They can be sued, they can borrow, they can repay loans, and therefore these need to be treated as real businesses. And the way you operate that business makes all the difference in the world as to whether that entity is going to protect you or not.
Yeah, I'll throw this out. What's the worst example of someone who didn't have books who got in trouble because they didn't have books?
Well, there are all kinds of cases. I don't have the citations at my fingertips, but there are many cases where that has been one of the issues, because there are a number of factors that the courts will look at. One of those very important factors as to whether to pierce the corporate veil is, does the company have books? Did the company keep good records, minutes, resolutions? Did the company comply with state requirements? And sometimes federal requirements. So those are critically important things. They're called corporate formalities. And a lot of times people think, well, it's just my business. Why do I have to do this? Why do I have to have a corporate meeting? I'm meeting with myself, for crying out loud. Why do I have to do that? That's silly. Well, courts look at that as a litmus test of how seriously you treat this business as a separate entity. And if you fail that test for treating it as a separate entity, respecting the separate existence of the company, then the court, if that is lacking, the court will pierce the veil and make you personally liable.
You know what I would say? While I was hearing that, I was thinking, I hate to say this, but you know, the cobbler always has the worst shoes. I hate keeping
Hmm.
the books for my real estate investments and all
I
my
know.
investments. But man,
Yep.
if it's easy, and I know you have to do it, well, let's make it easy. And because we have to do it, so we as business owners, as entrepreneurs, can do whatever we enjoy or makes us the most money. But anyway, I digress. I don't want to admit it, but
Well,
go ahead.
the reality is most deal makers, most business people, most real estate investors don't like doing this stuff because this is not in the wheelhouse. This is not part of the basic makeup. And therefore, you need maybe an assistant, you need a bookkeeper, you need somebody else to take care of this minutia that drives you personally nuts, and none of us ever want to do it. So it has to be done. So make sure you've got an easy way to do it.
Yeah, and we'll talk about that in just a little bit. By the way, once again, my name is Kenneth French, vastsolutionsgroup.com, and this is Bob Bloom. We had a couple of questions that I asked our community earlier in the day, and a couple of questions came in. What actually does the IRS require for real estate investors as far as books? And I jotted down a few things that business owners, entrepreneurs, real estate investors should be thinking about specifically as it relates to that question. You need to document all your transactions. Number one, you have to indicate and document your gross income. You have to document your deductions and your credits, and also your asset records, meaning for depreciation purposes. Keep records in general for at least 3 years, maybe even sometimes 6 years, depending on the circumstances, and keep employment tax records. Those are just in general, the things that are required. Now, what I'm also going to say is nowadays, there was a while back, there was a law that was passed as far as taxes, and it has to do with research and development, meaning tax credits. There are a lot of business owners now that have more access than ever to research and development tax credits from the federal and even the state level. So you need a little bit more documentation. But what I would say is, if you're a business owner, and by the way, if you're using Chat GPT or Gemini, any of the large language models, and you're being innovative in your business, you should at least think about looking at tax credits. And in line with that, you should really, really make sure that you have your books in order, because man, you're walking by money. You could be doing research and development tax credit type things and not even know it. But if you have your books in order, you might be able to get money back from the government. Hear me correctly. You might be able to get money back from the government. Not only tax deductions, but tax credits for some of the work you're doing. As simple as using ChatGPT or Gemini. Look who we have here, ladies and gentlemen. Huh,
Yeah.
Nick? What's up,
Hey,
buddy?
why don't you tell me you have to do an update before you make me join this?
Well, apparently we didn't do an update.
What?
Nick, I don't know how much of this you've heard. We're always
I
having
heard.
a good
I
time.
was
Bob and I are
actually
having a
on
good
from the
time.
very beginning. I've heard everything, and I wish I was trying to unmute myself. I could just point fingers at both of you guys. But
Nick.
yeah, all good.
Nick,
No, I heard it all. This is the guys. This is really. I mean, this is really important stuff, because I think what I want to have you guys do, since I can be the voice of reason between you two brainiacs there, try to bring this down to the common folk level. Let's just talk about this at a real simplistic level. Talk to me like I'm a fifth grader, right? Why do I want to do this? Why should I do this? And Bob's already alluded to what happens if you don't do something either right or wrong. But I think when I hear books and bookkeeping, and Kenner, you mentioned on the real estate side, it gets people a little bit, panicked and sort of frozen. But I love what we have on the AI side of what we're going to talk about here. And I mean, just at a high level, how simplistic is this? Like, is it as easy as 1, 2, 3? I mean, seems to be.
are you talking about books and what we're
Yeah,
rolling
just
out
anything in general,
you guys
because
and for other
you guys are
investors?
talking at a legal level, you're talking at a taxation level, but really at the end of the day, I'm not the one that's doing it, right? I'm not the one that's doing it. You're going to tell me what to do, and I'm going to do it, basically. And when I say you're going to tell me what to do, you're not going to tell me how to do my books. You're going to tell me what you need, or what I need to do to submit and process and execute whatever it is. And that's all I want to make sure that, how simple is this? Because we all know that we need it. But how simple is it for somebody that works all day long, got kids, go to soccer practice, all that stuff. How easy it for somebody to take what you were talking about here today and actually take action and submit it? Is it 5 minutes? Is it 5 hours, 5 weeks, 5 months, 5 years? Break that down for me from a high level, if you don't mind.
Yeah, basically what Nick is asking for is AI bookkeeping that's free. Going back to the story about, our new client who's getting sued because he didn't have his books in order. That basically, to a certain extent, made us think, well, wait a minute, we need to roll something out that's very simple and is low cost for business owners that can help mainly, by the way, real estate investors that can help real estate business owners, et cetera, make sure that their books are in order. There's no reason, in my opinion, to pay for Quicken or QuickBooks, spend $40 a month when there's so many ways to throw out bookkeeping softwares that would be available for business owners, that being real estate investors. Number one. Number two, why pay for a bookkeeper when there's so many ways that you can put together a software package that we've put together that helps business owners very simply, very efficiently, and cost effectively in such a manner that it's free. So I'll boil that down to something even easier. Bob as an example. Let's say Bob's a busy guy, very important attorney, right? Well, if he goes to vastsolutionsgroup.com, there'll be a pop-up. You could sign up for our free bookkeeping software that's really made for specifically real estate investors. So you won't have to worry about paying for the software, and you don't have to worry about paying a bookkeeper. It will take care of all the administrative things you need as a real estate investor with respect to your books and bookkeeping. It's as simple as that. Free.
So let's break that down again. I'm gonna bring you down just a little bit for all my peeps out there that understand where I'm coming from. I get free. I think everybody understands free. Super cool. I think everybody understands how we can leverage AI to think and act like a human, but be a computer, basically, right? So my question then is, okay, those two things are easy to understand. But my last question is, how simple is it for us to start this process, right? How simple and then what is walk me through, like I say, Kenner, I'm all in. What do I do next, right? What does that look like?
Go to vastsolutionsgroup.com, again, vastsolutionsgroup.com, and sign up. What happens? The AI, well, first there's an onboarding with our staff, and then two, the AI will onboard the real estate investor. So basically they don't even need a bookkeeper. They don't need to get the software. Basically, you can upload your statements, and it does all the categorizations for you as a real estate investor, developer, etc. So you don't have to take that time to do it. It's pretty smooth. And now let me explain a little bit more in depth. So we've been doing artificial intelligence for years, but we've been doing it behind the scenes. All our bookkeeping technology, all our tax technology, it's been behind the scenes, but now we're just allowing other people to use it. Hence the reason we are now opening up our software, our technology to business owners, specifically real estate investors. And we call the AI portion that is bookkeeping vastbookie.ai. Again, vastbookie.ai, but it's all in the chassis that is Einstein that can be found at vastsolutionsgroup.com. So it's a relatively simple process, by the way.
So if I say I'm in, I want to do it, I need to do it, I have to do it. When I go in and I start this onboarding process, okay, as a first-time user, and I don't even know what AI stands for or even how to spell it, right? Like maybe know how to spell it, but that's beside
yeah, I hope so. Yeah.
Is it something that let's just say that I'm a one-man shop, right? I do a horrible job of doing this, and I have stuff written down. How much time to get it started and get the foundation established? That's sort of phase one, right? How much time in a matter of hours is it going to take to get the process started, and then how much continual monthly management or maintenance? Because I still, even though your system is going to do all the heavy lifting, we still got to give the information to the platform to actually do the processing, right?
Yep. The answer to that question is, our expectation is that you will spend no more than an hour a month as it relates to the software. Now, what I would say is, now the vastbookie.ai, again, the AI portion of our bookkeeping software, it's made for, I'll say, let's call them entry level real estate investors. The more technical, the work that is required, the transactions, etc., potentially it might not be a fit, right? But then we have higher levels also. But what I would say is it shouldn't take any more than an hour a month tops to,
An
because
hour a month maintenance.
automatic, the AI reads the numbers, the transactions pretty much automatically.
So an hour a month on a maintenance level, that's pretty simple. And then what about the initial setup? Like I got to go
That's what
get
I'm
all
saying.
my stuff together. Same thing.
1 hour. Yeah, it shouldn't take any
Okay.
more than an hour.
Awesome.
That was a good question. That's a very good, because sometimes I get, stuck in the weeds and I'm thinking about all the technical elements. But for me, again, as a lazy business owner, when I, again, the cobbler has the worst shoes. I forget sometimes that it's the small details that make a big difference. And what I would say as a business owner, this makes it so you don't have to do all the work. You don't have to be a bookkeeper. You don't have to hire a bookkeeper. AI has come so far that it makes it so much easier for a business owner. It really is incredible. And by the way, I'm also going to say this: down the road, a lot of technology like this will be available. We obviously have just been early on the AI world.
So what is the next logical step in this process? I mean, so maybe I'm a new business owner today, but hopefully 5 years from now I'm not, right? Hopefully my business continues to grow, I get bigger, maybe I branch out, whatever that looks like. Is there a path for growth for us utilizing the products and services that you guys have?
I love that. Bob, why don't you go first, and then I'll dovetail to what you say. I love that question, by the way.
Well, sure. And, as a business grows, of course, you're going to want to have books. Once again, that's kind of what we're talking about. You're going to want to be able to document going back to what Kenner was talking about a minute ago, about how important documentation is for documenting your deductions, et cetera, et cetera. You also want to be able to establish a business purpose for those expenses. So for instance, if you go on a trip, and you're going to write off the airfare and the hotel and the car rental and then 50% of food, you need to establish what was the business purpose of that trip. So those are all very important requirements, and those would be documented once again with books, with the bookkeeping system. But what Kenner has described here, an hour a month, and once again, if you're not that guy who will do that, even spend an hour a month, then it's not that hard to just have an assistant do it for you, because Kenner has made it that easy with AI.
So with the software with that, so is it intelligent enough to help flag and look for optimization for the deductions as it gets passed on to the tax preparation standpoint? Is it doing that as well?
Exactly. It helps to opt, because again, we've been using AI for years, so it's learned from what we've been doing over the years. So it's not only learned from how we've put together the model, but it also learns the individual's model or the corporation's model or the LLC's model, and how to look for deductions that can help the business owner to optimize or lower their taxes. The answer to that is yes. And I'm glad you picked up on that, because that's the important thing.
And Kenner,
Well,
there's
one thing to have the books done, right? But it's another thing to optimize the effort and whatever it is to get, not only to protect ourselves from a legal standpoint or from a taxation or a government standpoint from the IRS, but also to take every inch that they're willing to give us as business owners from the deductions that we're allowed to take as being small business owners.
You're exactly right. Go ahead, Bob.
I was just going to say, there was a question in the chat. I answered it, but the question was, is this program just for real estate investors, or can small business owners use this service? And the short answer is, yeah, it's available for any type of business. It's just that very often we have real estate investors as clients.
That's exactly right. Right. Oh, and by the way, also to make mention a little bit more in depth on your question, Nick. Yeah, people could use, obviously they could use their tax solutions, they could use a number of solutions, but the reason we're rolling, there's so many people who need to clean up their books. We're finding more and more people, they're busy lives, so their books they're in disarray. By having, again, organized books, if you were here at the beginning, by having organized books, it takes care of the asset protection. Make sure a moat is around your assets. And again, as we were talking about, there's so many people who are potentially getting sued because they're real estate investors, and it makes it much more difficult to be sued successfully if you have your books in order. And again, obviously, you know your rate of return is going to be better because you know where your money's going, you know what your ROI is. Plus, it makes it easier to be able to have communication with your tax provider, your tax preparer, when they see your books are in order, and then hopefully they can even give other solutions that are maybe tax savings that maybe our system didn't find as an example, et cetera.
Yeah, Ken, earlier you were talking about audits and surviving an audit. And if your books are in order, you're easily going to be able to survive an audit. If your books are not in order, good luck. You could, be dinged by the IRS for many, many thousands of dollars if you cannot document those expenses.
By the way, I have another question about R&D tax credits. Yes, a lot more people are going to have access to research and development tax credits. And this is a big element. So let's say, as an example, you're doing a bunch of work in, let's say Nick, let's use Nick. He's a fun guy, right? Let's say Nick's doing a bunch of work, and which he is, by the way, in artificial intelligence, or really pushing the envelope as far as innovation. You don't even have to ask the IRS if you can get research and development tax credits. You basically, when you do your tax forms, you are also including the work you're doing and spending as far as, employee costs, buying a computer, et cetera. So it's not as though you potentially would get turned away from research and development tax credits, but you basically, just like you're doing, you're filing with the IRS, you're also including in that your research and development tax credits. So you potentially have a lot more ways to get research and development tax credits if you have your books in order, clean books in order. And again, it's not a deduction, but it's a tax credit. So potentially it could be a dollar for dollar tax credit, or dollar for dollar money being put in your pocket versus a deduction where you might be getting savings of 20 cents on the dollar.
Mm-hmm. Kenner, you just answered a question that appeared in the chat. Are you able to see that question? But I think you might want to answer it in just a little more detail.
Yep.
The difference between a tax credit and a tax deduction.
Let's say Bob spends $1,000 on a computer, and let's say, even though he's a big hitter, let's just say his tax rate is 25%. Generally speaking, he would get $250 off his taxes based on the IRS code. So he would.
That is a deduction. That's a tax deduction.
I was just about to say that's a tax deduction. $1,000 purchase of the computer, tax rate is 25%. $250 is the tax savings in that case, and that would be a tax deduction. Generally speaking, if you're getting a tax credit and you spend, let's say, $1,000 on some cool new innovation, theoretically you would get, depending on the circumstances, there's a lot of caveats. If you spend $1,000, you would get $1,000 back from the government as far as a tax credit. So in that case, it's a dollar for dollar tax credit. Number one. Number two, and I'm being generic, by the way. Number one. Number two, also, by the way, that's a federal tax credit. Let's just say you're also in whatever state that has a R&D or research and development tax credit pool. Let's just say you're in California, and they have a bunch of money for tax credit. So you not only save money on the federal level, but you can double dip and also get money back from the state government, in that case, California, maybe depending on the circumstances. Let's just say you get 50 cents on the dollar as an example. On a $1,000 research and development tax credit, when you put in for it, in that case, you'll get $500 back from California. So you double dip. And the nice thing is it helps you to be able to grow your business because you've spent money basically on technology, which is helping your business to grow. And also indirectly, it helps the United States and the world because you're pushing the envelope as far as technology goes. So there's a lot of a difference with respect to research and development tax credit as there is a deduction. It makes it really nice for a business owner to also think about research and development tax credits because it's money in your pocket, and it's a lot of money in your pocket potentially. All right, so Nick, I love your questions, by the way. I wish you would have been here earlier. It's so much fun hanging out.
I was here earlier. You just didn't see me.
What other questions do you have? I want to add some value to these people. I mean, we have another 10 minutes. What are some other questions you have that you think will help your audience as real estate investors? By the way, Can you tell us a little bit about yourself? We can't exclude you because you're a big hitter in the real estate world.
I'm about a big hitter. I've been doing it a long time, so if that makes any difference.
Mm.
Look, I mean, I think here's how I look at this from because there's probably people that are experienced business owners and new and people that literally are looking to start a business, which obviously Bob would be a great resource if you're looking to create an LLC or get that established and doing it structurally correctly. And that's for a different call, but there is a right and a wrong way to structure entity formations depending on what business you want to do. But more so than that, most of the time, from my experience of having conversations with people, myself included from when I started, when we start businesses, we are usually the jack of all the trades. Like if I'm going to go open a restaurant, not only am I the maitre d' and the owner, I take the reservations, I order the food, I cook the food, I pay the bills, I do everything. Okay. And as we grow, as we go on, then we start outsourcing some of the stuff. And what happens typically is that when they do it in the beginning, at least from my experience, we do everything, but we don't do any of it really, really good. We don't do anything well. We don't do anything correctly. We're, jack of all trades, master of none. And I think what we're talking about here, at least from what I'm hearing, is that you don't have the luxury in being a business owner to be a jack of all trades. You can't be a bookkeeper, and you can't be the accountant, and you can't be the sales guy. You got to figure out what it is that you do best and let other people do the rest. Bookkeeping, that's somebody else's job for 99% of the people that are in business, unless that's your business, right? Same thing with taxes. I don't do my own taxes. Can I do my own taxes? Probably. Do I want to do them? Probably not. Will I get maximum deductions and benefit? Probably not. That's why we do it. That's why we do it this way. So I think in the beginning, when you start out, we're sort of forced to do all this on our own. But as you grow and you get bigger and you have start revenue come, you have to turn those things around. Bookkeeping is a very simple starting point, but it has tremendous value and importance to the overall health of the business as you continue to grow.
And what I would say is, I mean, I'm not going to say it's a commodity, but why pay Quicken or QuickBooks, whatever, $40, $60 a month and a bookkeeper? Not to rip on bookkeepers, by the way, but I just think that it's becoming more of a commodity. It's an essential commodity, and there's other solutions out there that help real estate investors. By the way, I just put in the chat, our quote offer, free bookkeeping. There's not much better than free. I put in the chat, click on that, start for free, and you can get free bookkeeping, which we've all established is important. Number one. Number two, it's relatively simple. So really, why not start it?
Yeah, I mean, look, it's just either you need help with bookkeeping or you don't. And then if you do need help, I think this is a very viable option. If you don't think you need help, well, then just make a determination why that is the case. And is it about money? Are you getting maximum value of whatever the process that you're currently using? I like the AI approach because AI is, once it's done correctly, is probably, I don't know, Kenny, you can probably answer this better than anybody else, it's pretty damn accurate. Doesn't make a lot of probably mistakes.
Yeah, it's called a sigma rate. It's going to get a little nerdy, but it's 14% of the time there's a mistake, but it's a lot lower. That number is a lot lower than a human, by the way. Plus, it's more simple because, I mean, someone who's doing the work of our AI model, it would be costly. Two, they would make more mistakes. So 14% might sound like a lot, but it's a lot lower than what humans make. And you don't have to call the human in this example and go back and forth with receipts, et cetera, et cetera. It's a lot more simple. An hour a month is a lot less than it would take working with a human at a lot higher expense. As we get ready to, close the door on this, Nick, what are some thoughts as we get ready to close the door on this topic on asset allocation or asset protection on real estate, on bookkeeping? Give us some last minute thoughts.
I mean, I just think it's just, you just need to do a health check on your business, and it's not necessarily on the bookkeeping side, but just things in general. I know Bob said, hey, how many businesses are out there that are running things through a personal checking account and probably don't have a business account. These little things all add up and all integrate as to what we've been talking about today. So for some of the people that are on this call or watching this or whatever it is, there might not even be to the point of having the need for the bookkeeping because they got enough other issues that they got to deal with first because they didn't set up their entity correctly. They don't have the right. They're running everything in their personal name. We see that a lot too. So that's you got to learn that stuff first so that you can get that in order so you can go to this level, which is pretty much in the beginning side of it. But most importantly, as you continue to grow or expand your business, this is the bare minimum. This is the foundation of everything that you're going to do moving forward. And you have to build a business. Look, there's one thing I tell people when I speak or whatever, always build your business to sell. Always build it to sell. Doesn't mean you have to sell it, but build it as if you might or you will sell. And the reason being is because when you build a business to sell, you're putting in best business practices into the structure. Okay. Is running a business with a personal account versus a business account best business practices? Absolutely not. No. Is running a business in your personal name versus having an entity structure? Absolutely not. Is all these little things all are little bitty pieces that add up to whether or not your business is going to have a valuation in the future in the event that you choose to, because we see this right now. We've seen it right now. Especially in the blue collar business, we talk about real estate. We have tons of the baby boomers are retiring now, right? And there's a lot of businesses out there that are mom and pop run and operated, plumbing businesses, electrical businesses, things along those lines. And they're not structured for an exit. And that's a huge problem because their kids don't want these businesses. And at the same time, the value to anybody that wants it is not anything because which is a sad story for people that are trying to, sell and get some kind of money back in, even though they have a solid book of business. So I just say build it like you're going to sell, follow best business practices, bookkeeping, entity structure are all fundamental principles of doing just that.
Yeah. Well said, Nick. Thank you. And then what about you, Bob?
Boy, I would just second everything that Nick said. I couldn't improve on that. You're exactly right, Nick. Build your business to sell. I guess the only small thing I would add to that is if you're building a business to sell, you're automatically using best business practices and you're going to have a better business, period. You're going to have a better business. It's going to be more profitable. You'll have better margins. You're going to have happier customers. So why not? Why would you not want to do it that way?
Wow. On that note, thanks, you guys. This has been good. I think it's been really good. I think we're adding some value for some business owners, not only on the asset protection side with Bob, but obviously with Nick. And I've been very glad I ended up hooking up with Nick because Nick's obviously a real estate guru and he's added some value to my business. And I think he's helping so many businesses out there with respect to, increasing net worth. This has been a great alliance. I'm glad we're here. And, if anyone's interested, if anyone really wants to, get their books in order, which they should, they don't have them in order, or if they're a brand new company and they need to get their books in order, go ahead and click on start for free, as you can see there. Or you can go to vastsolutionsgroup.com, vastsolutionsgroup.com. You'll see a pop-up window. Go ahead and fill that out and we'll start the process. It's relatively simple. I mean, an hour, let's say, an hour a month, is it worth it for you to potentially stave off a lawsuit? I'm going to assume the answer to that might be yes. Once again, this is Kenneth French, vastsolutionsgroup.com. I really appreciate everyone taking the time to watch and listen to this. Thanks, everybody.